Hello, everyone. Welcome to the market update for Tuesday, December the 21st. Before I get started, I'm gonna take a little bit of time today. I realize that I've had a lot of new people join over the last little bit, and some people might be a little bit confused as to the process that I'm going through to analyze the market and to decide on which stocks I want to put in my watch list, which stocks I want to put in my portfolio. And so I want to take a little bit of time today to kind of explain some of that. But I also want to direct you to where I teach a lot of this stuff. There's a whole library of training videos that talk about the things I'm talking about each day or each update. And I can direct you towards that. I also want to make sure everyone knows if you have questions, if you don't understand something, to email me here at jerry@traderspro.com. I put this up in the beginning of class. I'll try to put it up at the end of class in case people are joining late so they know how to get a hold of me. Now before, so let me go ahead and drop this. Pull up our Traders Pro site here. Oh, before I get into the analysis here, let me pull up where you can find all of that training. If you go to YouTube, the YouTube website, you type in Traders Pro, and you need to join the channel, the Traders Pro channel. And when you do that, and it doesn't cost you anything to join the Traders Pro channel, but click on Library right here, and you can scroll down through. You can see there's all kinds of well, there's not only there's previous market updates and previous stock specific classes. There's also trainings that I've done, candlestick analysis. If you're wondering, why I'm talking about a particular candlestick formation or price action, and you can learn a little bit about that with these videos. There's tons of these videos. But I just want to let you know that it's there, and you can go through it at your own pace. There's basic. I talk about basic trend analysis, Elliott wave analysis. I reference Elliott wave analysis sometimes as I'm going through the charts. Basic trade management techniques, entry techniques, stop loss techniques. As I'm managing the portfolio, I'll use some of these from time to time, and I cover those in these trainings. So again, real simple. But that's where all that information is, and you can take advantage of it, like I said, at your pace. Let's get into now. As far as the process here, there's two classes that go on during the week. There's the market update class on Tuesdays. In this class, I'll tend to focus more on the market conditions. I'll go through that watch list of different areas in the market. We'll look at oil, we'll look at gold, we'll look at the dollar, we'll look at the VIX, and we go through. I cover what I'm seeing right now, what I expect to happen over the next little bit, the trend direction of some of those different markets. I also try to go through find a couple of patterns that I like, even though this is not the stock specific class. I know that people tune in for stock picks. They like to get ideas, and so I try to go over a couple in the Tuesday market update class. Thursday is the stock specific class. We try to focus on finding picks that we can put in the portfolio or put in the watch list at least. Now, as far as how do I decide what stocks to trade and put in that portfolio, this is what I go through each each update is the process. And the process is that you first need to recognize the market conditions you're in. So there is a little bit of a market analysis on Thursdays as well, because before we start, looking at these individual stocks we want to put in our portfolio or put in our watch list, we want to know what the market conditions are. If the market conditions are bearish, notice how last week we didn't put a lot of stocks in the watch list or a lot of stocks in the portfolio. The market conditions were more bearish. Actually, I take that back. I did get into some trades on Wednesday when we did have or I think it was Thursday, when we did have a little bit of a bullish reversal day on Wednesday. I thought for sure we were going to rally off of that. We ended up moving a little bit lower over the next couple of days. In other words, the market made the lower probability move, which will happen from time to time. But we want to recognize the conditions we're in, the trend we're in. If we're in a downtrend in the market, we don't want to be buying a lot of stuff. We want to be getting more of a cash position. We want to wait for the market to kind of get done selling off and then look for new opportunities to jump in. And so that's now how do you do that? That's what I start off with. We look at the direction alerts, what they're telling us, and I'll as I go through those, I'm explaining what I'm looking at and what it means. What does it mean if the market sentiment is high or low or in the middle, or the breadth, or the momentum? I'll go through and explain what I'm looking for, what that means. I then will look at when we start looking at specific stocks, I'll then look at the sectors here. Now, this ranks the sectors from the strongest sectors to the weakest sectors. And there's been a little bit of confusion. I got an email that, why do I pick stocks that are down on the list? Why did I go down to business services or consumer staples? Well, obviously, we want to focus on the strongest sectors. So you do want to find trading opportunities in the upper part of this group, because these are the sectors that are outperforming the market. However, I also don't want to have all my trades in my portfolio in one or two sectors. You want to be diversified. Now, what will happen is when you click on the hold signal or something like that, typically I'll look at the stocks that are hold, because I'm looking for them to go from hold to buy. But if I click on the hold on utilities right here, what it's going to show you is it's going to rank the highest stocks within those sectors. So obviously ideally you want to be trading the stocks in the highest sectors, the highest sectors and the highest stocks within those highest sectors. Now, if I don't know how to read a chart, or I don't want to learn how to read a chart, then I'm going to keep it real simple, and I'm going to stay with the highest sectors, and I'm going to stay with the highest stocks within those sectors, and I'm going to buy on the buy signal, I'm going to sell on the sell signal, and I'm just going to keep it that simple. Okay. Now, when I'm doing these classes, though, I'm assuming that if people are going to spend an hour of their time with me, I'm assuming that they want to learn more, that they want to learn how to read a chart, how to do additional analysis. And if you want to take that extra step, it's going to make you a better trader. We try to keep it as simple as possible for those that have no time and no desire to be professional traders. Great, the software will work fine if you let it do the bulk of the work. But can you get better results if you educate yourself on how to be a trader, how to recognize price action, how to recognize chart patterns? Absolutely. And that's the same with any industry you're in. If you want to take the time to get better at something, you're going to get better results. And so that's kind of the approach I take in these classes is I assume I'm dealing with people that want to take it that next step further. And so I'm going to add into this, I want to look at chart patterns. If I don't see any chart patterns on those stocks that are at the top of the list, maybe they're in a strong uptrend, but I don't like the entry point. I don't want to chase at that point within the trend cycle. And so I might look for stocks that pull back a little bit. Now, if you've been in my basic chart analysis class, you know that stocks will tend to trend in a stair-step fashion. And because I understand this, I don't want to buy a stock that looks like it's the top of the trend. I like to wait to have that step or that pullback and look to get in after that step or that pullback. It's easier to manage it this way. You usually have a better chance of getting higher reward to risk. And so now there's also other patterns that I like that I'll show you when I'm going through these charts. I like those. I like to see those cup with handle formations where you get kind of a bowl-shaped move. And I like to try to enter in on the right side of that bowl, or I like to wait till it breaks out of that bowl. So I have an entry point here or entry point down in here. So I'm looking for those type of chart patterns as well. But like I said, I'll explain that as I'm going through and looking at those charts. I'll explain why I like the chart. Okay, but I'm going to go through these different sectors, and I'm trying to find patterns that I like. So ideally, like I said, you're going to get the higher sectors and the higher stocks within those sectors, and then on top of that, the chart patterns that are there. So I'm doing a lot of that work for you, and I'm not taking the time to go through the whole list because that's a lot of wasted time. You know, it's really boring to sit around and go through all of this stuff, especially since I usually do it very, very quickly, and it's hard to kind of explain what I'm looking for or doing at the time. So I'm going to go through these, especially in that stock specific class. I'm going to show you the stocks I like within those sectors. Now, within the sectors, when we get into the hold section, for instance, ideally I'm looking for a 98 strength rank stock that has a hold. It's at a hold, and that I like the pattern. Now, there are times when there's tons of these 98 strength range stocks that have a hold signal and that have a great chart pattern. But there are times when I don't find anything in that 98 strength rank hold, and I'll go down the list a little bit. I'll go down the strength rank list a little bit. I don't like to go down below 90, but it depends too, because there are some of these sectors where they don't have high strength rank stocks. You know, if we look at, for instance, construction is one that comes to mind. If we go under construction right here and I go under the hold section, you have two stocks that are even in the 90s. The rest of them are down here in the 80s. Does that mean that none of these are good trades? No, it's just these sectors sometimes are just historically don't have high strength rank stocks. So there is a little bit of relative nature to this, where it's relative. And this comes with just experience. And going through these sectors, you'll get to know which ones. Basic materials sector very often doesn't have high strength rank stocks that are at the top of the list there. Like I said, construction. So I allow myself to go down into the 80s in the construction sector. And again, if I can find a nice chart pattern in here, even though it's an 85 strength rank or 84 strength rank or something like that, I'll still consider it for a trade. So hopefully that gives you a little bit better idea. From there, when I find stocks I like within that analysis, I'll put them in my watch list. This is a little bit of an imperfect. I have my stock specific class watch list. You know, when I put it in the watch list, it doesn't mean I'm going to trade it or I have to trade it. It just means it allows me to have a group of stocks that I would strongly consider for a potential trade. And then obviously I'm not going to have the capital to do every single trade in there, but then I can decide out of that list which ones I want to put in the portfolio. Now, what I put in the portfolio or decide to put in the portfolio might be different than what somebody else might want to put in their portfolio. That's fine. I understand that. I'm telling you right now, you put 4 or 5 professional traders in the room, and they're going to disagree on stocks on what they think is a great pattern, what they think is not a great pattern, or maybe not. I shouldn't say pattern. Obviously, with technical analysis, you're going to have a lot of similarities there. But you could have someone that bases their trades on the fundamentals of the company. This company has great fundamentals. I could look at it and not like the chart and say, well, I don't like it right here because I don't like the chart. You can have disagreements. You're going to get disagreements. And so what you're getting in these classes is a lot of my own personal bias, what I like and what I consider good trades. It doesn't mean that there aren't others out there that you could like or would prefer. But at least I can give you my reasons why I like it or not like it. And that's what I always ask people is if you can defend your position, if you can tell me why you think that stock is going up, then, and have a good argument. It's going to go up because it's going to go up, or it's going to go up because my grandfather said this is the future, and okay, but that's not a very good argument. That's probably not a very good basis for making a trade. But anyway, usually I can defend anything that I put in the portfolio or put in the watch list. But obviously, these aren't expected to be perfect choices. I also understand that people are coming into these classes each week wanting something, a trade or some idea. And so there might be market conditions. Again, I'm going to go through the market analysis. There might be market conditions where, and I usually say it, I'll usually say you don't want to be getting into a lot of things in this environment. But then I might present a couple patterns I like. Usually I'll say, well, we could put these in the watch list, and usually they're in a hold signal anyway, so you're waiting for them to go from hold to buy as confirmation. But there are times where you really shouldn't be doing anything. You should be sitting on the sidelines and waiting for better conditions. So anyway, I hope that helps a little bit. Like I said, going back and reviewing those trainings on your own time, you can find a lot of stuff in there that might answer some of your questions. Just getting in class every week. Usually it takes 3 or 4 updates before you start to get a little bit of an idea of what we're trying to do and what we're trying to focus on. And I try not to make it the same update routine every week. I try to maybe focus on something each week that's a little bit different. Sometimes it takes care of itself with just the market condition. The market's doing something that it hasn't done for a while. I can kind of teach what it's doing and what to look for and what to expect. And that can make the class a little bit different. But anyway, that I think hopefully I've explained a little bit of the process here for those that are new and maybe a little bit lost. But I emphasize, if you do have additional questions or what my explanation I just gave today doesn't help much, please just email me. Email me at jerry@traderspro.com. Give me your specific question or concern you have, and then I can address that. All right. I didn't mean to spend the first 20 minutes going through that, but I think that's important. I do that from time to time because I do know I get a lot of new people that join in and might be a little bit lost. So again, the first part here, we're going to be talking about the current trend. Now we start off usually with the direction alerts, and what we're looking for here is the market in an overbought or oversold state, or is it showing something with these indicators that can be warning us of something? Obviously, these first ones aren't going to change much. The long-term signals, we've been in a bull market for since the collapse there after the COVID in March of 2020. But since then, since we moved back to a bull market from that sell-off, we've been in a long-term bull market ever since. Now, you could look at the fact on the far right side of this that we might be in the later stages of a bull market. I think that would be correct. But I don't see anything right now that would signal that we're getting a larger correction. And that's one of the things I emphasized last week was that There, I pointed out, and I'll point out again, what we have to be aware of that could lead to a bigger correction. But as of right now, it just still looks like just a correction within the larger bull market. Now, what could change that outlook? Well, we start to see some of these indicators get into the far right side, into that extreme reversal risk range. Then we'd be a lot more concerned. But momentum in this case is on the far left side. That means it's oversold. It's telling me that there's a much greater chance of a bullish reversal or a bullish rally. There's less likely of further downside, but there's a lot of mixed signals here. Usually we're getting all the indicators in the same area. We'll get all three indicators in the extreme oversold, or we'll have all three indicators in the middle, or we'll have all three indicators at the far right. We've got the full mixture here, where momentum is oversold, breadth is right in the middle, breadth is kind of just trending, and then we still have that elevated sentiment. The sentiment is still high. Now, I've said this a thousand times, but I'll continue to say it. That concerns me, because there hasn't been any fear really in the selling that's taken place. There's a lot of market participants that just think this rally is going to go on forever. Now, it can go on longer, but this is what's going to lead to a much bigger correction or crash, or whatever you want to call it. Is because when the big correction starts, nobody's going to believe it's going to be a big correction, and that's when it keeps just going down relentlessly. That's when the fear spikes up and people start panic selling, and that's when you see the sentiment indicator really drop over into that left side where there's fear. This is where you start to see fear in the market. Right now, we're in this complacency range. Nobody is concerned that the market is going to have a bigger correction. Now, we're not in the extreme range, so there's still room for us to rally up. But if we start to rally up and we get all three of these indicators in that extreme reversal risk range, that's when you start to know that we're close to a larger correction. We should start to see a larger correction take place. Okay. All right, now let's look at the individual charts of the indexes to get an idea of what they're telling us. Now, the S&P, there was a critical area on the S&P. Well, let me go back to last Wednesday. So last Wednesday, last Tuesday, actually, I had the last market update class. I was talking about this as being a potential bullish reversal, this being a potential inverse head and shoulders pattern. Here's your neckline. This is a very bullish formation. And when we had that move up to that breakout area on Wednesday, we didn't break out, but we moved right up to it. I would probably say there was an 85 to 90% probability that we would break out. Well, what do you do when there's an 85 to 90% probability of something going high, the market going higher? Well, that's a good time to buy. The probability is in your favor that we were going to get that breakout. Okay. Now, what the market reminded us, though, and this is why no matter how much analysis we learn, no matter how much we educate ourselves, we cannot know exactly what the market is going to do. We cannot know exactly what a stock is going to do. The analysis I teach you is to help recognize the higher probability move, but there's always going to be situations where you'll get the lower probability move. And that's what happened last week. We had a bearish reversal candle on Thursday. And we dropped down here on Friday, and then had a gap down here, big drop yesterday. Now, I think that now overall, though, I think the pattern is still held up. One thing that was really interesting yesterday is here's the previous breakout area where we broke out to new all-time highs. If you draw a little trend line right across there, you can see that we dipped a little bit below it yesterday, but we closed above it. And we closed above it with a bullish hammer candlestick formation, okay? This has a very high probability of going up. When you get a hammer candlestick formation like that, I would say there's probably a 85% probability of going higher off of that. So when I saw that yesterday, I knew that there was a very strong probability we should have a rally today. Now we're hoping that that holds, and that this could be where we rally back up and break out to new all-time highs. Now, on top of the price action, we also have the seasonality. The days before Christmas typically are very bullish, and so, you know, if I were to say, is there a strong chance of the S&P getting back up to the new all-time highs? Maybe not necessarily breaking out to new all-time highs, but getting back up there, I would say there's a pretty strong probability of that taking place. So based on not only the chart pattern, but then also the seasonality. Now, we could also look at a longer-term chart here, go back a year or so, and you can see that, you know, even just I'm not going to be able to draw a real straight line here, but, you know, if I connect, you know, the lows right through here, we came very close. Oh, that's not a bad trend line there, just free drawing it. But you can see that the intraday low, so remember, we closed back above this trend line, this breakout area here. We closed back above at the end of the day, but the intraday low actually came down very close to that trend line of the uptrend. So the assumption here would be that was likely to hold, that we're likely to move higher off of that. And, you know, from a probability standpoint, with everything that's going on so far, there's a pretty strong probability that we'll go higher this week. Again, can the market do the lower probability move? Yes. But you have to ask yourself, are you going to try to guess when it's going to make the lower probability move, or are you going to try to just assume it's going to make the higher probability move? If you're going to try to guess when it's going to make the lower probability move, you're going to lose a lot of money because, well, just because that's why it's a lower probability move. You know, do you want to focus on the pattern that's going to be right 8 times out of 10, or the pattern that's going to be right only 2 times out of 10, you know? So you have to operate that way, but you have to recognize that sometimes it's going to do something that doesn't make sense. It's not going to make sense. If the market were to fall apart right here, I'd be the first one to tell you it wouldn't make any sense. But I've had that happen enough times in my trading career where you deal with it. Now, how do you deal with it? You deal with it with how you manage your trades, how you manage your risk, all that kind of stuff. In the portfolio right now, we don't have all of our capital in. We have capital we can deploy, and that's one way that you can deal with an event that goes against you. You can stop out of trades and preserve capital. Okay? All right, now I'm going to skip over to the Russell 2000 because this is the real critical one, and why, you know, why I have a little more confidence that the S&P could rally here. Remember on this one, I told you to watch this range that it's been in. Let me go to the 2-year chart because you can really see the range off that 2-year chart. This is the range that the Russell 2000 has been in for the last year. Now, we did end up breaking out above it, and then we came right back down. But we're right at these lows right here. We've hit these lows several times, and they've held. I talked about this last week. I said, if we, you know, the Russell has got to hold this range. If it breaks below here, you're going to see the market panic because it hasn't done so in a whole year. It's managed to hold every time it's come down to that low. It's managed to hold it. And so that was a big focus yesterday for me, and was a big focus this morning. Was how is it looking right down in that area? And here you had a little bit of that bullish reversal candle yesterday that came down and touched that support area. Nice solid bullish candle today. And again, I would assume that the Russell is going to rally at least for the next few days. I don't anticipate it's going to break out again. I don't think it's going to get back up to that breakout area necessarily. That could change, but it has a long way to go to get there. And there are a lot of headwinds right now to expect, a real strong rally. But anyway, that is, I'm going to continue to watch that this week. Does that hold? Now, the other indexes, the Dow, there's not a lot of support from where it reversed here, but it did have again, bullish reversal candle yesterday. Same thing, it moved up higher today. We gapped up, but we're also closing. It looks like we're going to close higher than where we opened. I am going to watch into the close. Do we fade into the close? That wouldn't be a very strong sign. You'd want to see, it doesn't have to close at the highs of the day, but you'd like to see it close near the highs of the day. If it fades significantly into the close, that would worry me. And another thing that does concern me a little bit today is that the volume has been very light. You can see right here that volume has been, so we're rallying on lighter volume. That meaning that there's not a lot of participation, a lot of money pouring back in just yet. But what that usually tells me is that today's rally is mostly a short covering rally. People that were short the stocks, if you're familiar with how shorting stocks work, you sell the share, you borrow the shares from the broker, you sell them first, and then you buy them back later, hopefully at a lower price. And that's how you make your money. You sell it the higher price. I sell it at 354. I hope it drops down to 340, and then I buy those shares back and I close out my position and I get to keep the difference. Okay. Well, that process of closing out those short trades is you're buying to close those positions. And that's what's taking place here, in my opinion, with the lighter volume. Usually it's a signal that a lot of what's taking place here is people that were short the market don't want to be short right now. Whatever that reason could be, a lot of it probably has to do with stocks moving up today and then the seasonality, the more bullish seasonality. Maybe the bullish reversal candle yesterday caused people to not want to be short. But what it also tells me with the lighter volume is that there's not a lot of new buyers really jumping in just yet. There is still a little bit of that wait and see. Maybe tomorrow, if we start moving up again, that might attract more buyers to feel like they can get in. Remember, a lot of people got burned, including myself, got burned last Wednesday on that rally. There was a strong probability we were going to break out. We didn't. I don't know about you, but if you've ever gotten burned or ripped off or something like that, are you equally naive again if you're faced with the same situation? No, you're a lot more cautious. You're a lot more careful. And so, the buying, for people to jump in and start buying aggressively, right now they're being cautious and careful. And that's showing up, like I said, with the lighter volume. Now, if we start to move up a little bit higher, I think you'll start to see that volume pick up and you'll see the actual buyers coming back in. And that's why I'd still say you want to be a little bit careful. Now, sometimes the market will rally and people will say, well, it's just a short covering rally. Like it means nothing. Every rally from a bottom starts with a short covering rally. That's usually what starts every move off of a bottom is short covering. Okay. So to say that doesn't mean anything is not true. But what they're really saying is you gotta wait for the real buyers to come in. They're the real buyers are the ones that are going to push things higher significantly. And so if we fade tomorrow, we come right back down tomorrow, that's a really bad warning sign, because that tells me those buyers aren't stepping in, and those people that cover their short positions see that and they start jumping back into those short positions. They start selling again because they know that's not a good sign, that maybe we are going to go lower, and it can snowball from there. So again, on a day like today, does it mean we can't add anything? No, we could add something, but we want to, before we get too aggressive, we'd want to see a little bit. We'd like to see more buyers jump in. Okay. The Qqq chart, again, this is the tech sector. It dipped a little bit below its breakout area. Here's the breakout area right here. It closed. It didn't close back above there yesterday like the S&P did on its, but it did have a bullish reversal candle, and it followed through with that again today. Again, albeit on lighter volume. But this looks like a potential ADC pattern right here. Wave A, wave B, wave C. And we'll see if we start to rally off of that, see if it can get back up there to new all-time highs. If you really want to see the potential for the Qs to go higher, you can look at the biggest stocks within the Nasdaq 100, Apple, Amazon, Facebook, Netflix. I know all these companies are changing their names. I'm going to refer to them as what I'm familiar with them. Maybe somewhere down the line, I'll call Facebook Meta and Google Alphabet. But I mean, it's getting ridiculous now. I mean, Square is now blocked. It's tough enough trying to just remember the names that you're familiar with, and now you gotta switch that. But hopefully everyone knows what I'm talking about when I use the traditional names. But anyway, you'd look at those stocks to see how they're moving, how they're trending, or how their patterns look, and they can give you an idea of how the strength of what the Nasdaq 100 chart will likely do, or will likely continue to do. All right. Continuing on our list here, the Russell. Oh, we already did the Russell. Let me take the volume bars off here because it tends to bleed into the chart. Bonds. Now, with the bond market last week, we were pointing out that that we had these higher highs, higher lows. It was it was acting like an uptrend. But I also pointed out that this was an impulsive move down, and this was starting to look corrective, more choppy. This look, whenever you have that impulsive up, impulsive, typically you're rotating between impulsive and corrective. When you get impulsive up, impulsive down, and then get corrective, it's often a signal of a potential trend reversal. We did get a drop today to kind of confirm that a little bit. We've finally gone to a lower low here. Now we have a lower high. Again, you had impulsive up, impulsive down, corrective. The way it was acting, there was a pretty strong probability that you would get a move down. Now, could this just be wave A, wave B, wave C, a bullish ABC pattern here, and it starts to trend back up again? That's possible. But as of right now, it's acting like a trend reversal. It's acting like a downtrend. And so I'm going to assume, now that is a bullish reversal candle. No, actually, it's an indecision candle. It's a spinning top. But it is, although it's down from yesterday's close, it is trading higher at the point, higher than where it opened. You can see what that won't mean anything until you see what it does tomorrow. But overall, the behavior here is it's acting like a trend reversal, acting like it's more likely to move down. Now, typically, the bond market is moving, and not always, but typically inversely to the stock market, because usually when there's flows of money going into bonds, it's coming out of the market, going into bonds. When it's going back into the market, it's usually coming out of bonds and going into the market. So this would be more bullish for the market to see that bonds are down. That would kind of confirm the rally today in the market, that the market's moving higher. Like I said, it doesn't always have that relationship, but the chart is kind of showing that, and that it's acting a little bit more like a downtrend. We'll see if that continues. Like I said, this is an indecision candle. It could, maybe it broke to a lower low and that's it. Starts moving back up again. Where would I know that what point would I know that that maybe that isn't trending down? Well, if it moves back above this range right here, here's your drop. If it starts moving higher, if it moves right back up and goes higher again, then I'd probably label that as a bullish ABC pattern with a probability of going higher off of that. So, all right. Gold. Now, gold, last week we were talking about how gold was, we had this impulsive move down. It was moving more corrective. It was actually, I think, starting to, let's see, what day was that? This is Tuesday, Monday, Friday, Thursday, Wednesday. So Tuesday, we were looking at this, we were looking at the sideways range. We said there's a stronger chance of going down because this is impulsive, this is corrective. Now you did open here and you did drop down. It did have a bullish reversal candle though, broke out a little bit higher. But overall, this still could be considered corrective. This still could be correcting that move down. I think it's kind of significant that it rallied up to this point. Maybe you have a little bit of a bearish head and shoulders pattern there. What would make me more bullish on gold? Well, I think if it could break in short term, if it could break out above this area right here, that resistance, that would be a little bit more bullish on gold. If it breaks below this area right here, that would be a lot more bearish. It'd be more likely to go down to this area right here. Since we're kind of right in the middle, we're kind of in no man's land right now. It could go either way. But those would be the key areas I'd be looking for. A break above here would be more bullish. A break down below here would be more bearish. Gold has really been I feel bad for the gold traders out there because, and I'm not a commodity expert, and usually you really need to be if you're going to be trading gold and silver on a regular basis. You need to understand a little bit of the nuances of those trades. But typically gold it's a hedge against inflation. Anytime you see inflation, you'd expect gold to go up. I would expect gold should be at new all-time highs with the amount of inflation that we're seeing, but it's been the opposite. Gold's been all over the place. Now, again, there are people that can point to different reasons for that. There are some unique conditions. One thing that people point to is that gold isn't the ultimate hedge it used to be, that cryptocurrencies are taking some of that away and affecting some of that movement, and that could be the case as well. But boy, I tell you, gold's been really hard to read over the last several months, especially as it relates to inflation. You would expect it to be at new all-time highs with the type of inflation we're seeing. All right, oil. Oil. Last week we talked about how it looked like it was kind of bottoming right here on this big pullback. Had an impulsive move up. This was looking corrective. It did dip a little bit yesterday, but that still looks like a little bit of a smaller ABC correction here. So I'm a little bit more bullish on oil. Now I get the fundamental argument. You could say, well, if the new variant, the new COVID variant slows world economies down, particularly Asia. Asia's a big oil buyer. Is that going to put more pressure on oil to continue to drop? Yeah, but here's the argument you always have to look at. Remember, the market is always forward thinking. Could this big pullback we already saw in oil be that anticipation of be caused by the variant? And the market did start to, the oil market as well as the stock market did start to sell off significantly when that rumors of that variant coming out. So could it be that it's already factored that in, and now it's looking forward saying, hey, if 75% of all cases right now are was Omicron or whatever the name of the variant is, I can't keep track of all these different variant names, that it's going to peak here pretty soon, or peak in the spring, or we're getting closer to that we'll get close to that peak here, the worst well, the worst can sometimes be yet to come, but a lot of times as far as the markets are concerned, because they're forward looking, you'll see the market move up before the worst conditions come out. This is an old Elliott wave analysis. Go through those classes on Elliott wave analysis. I talk about this, that usually the worst conditions, when you feel the worst conditions, like the Great Depression, the market had already started to rally when the worst conditions of the Great Depression were being felt. So could the same thing happen here? And there's been a lot of talk about this. I'm not presuming to be the only one suggesting this, but the talk right now is we're probably going to see the worst conditions of the Omicron variant come in, but the market should start to rally ahead of that. And maybe that we're starting to see that with the oil market is it already bottomed and it could be starting to move higher. Now, what's going to be critical here is, does it hold? If this is let me go back to the 6-month chart. Does this maintain a higher low? We don't want to go back below this reverse. This is a strong bullish reversal candle. We don't want to drop below that, or it reverses all that momentum. So we want to see it go to a higher high. That would confirm that it's acting like an uptrend. So so far we have a potential higher low. What we want to see this next week is, does it break to a higher high and confirm that it's acting like an uptrend? If it is, we'll assume it's going to get back up to the previous high and see if it continues to act that way and continue to act like an uptrend. The dollar, what do you see on the dollar here? You see it moving sideways right here, right? What do I always say? Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's likely to go, not that it has to go, but likely to go after it's done moving sideways. So the previous move was up. The dollar's been moving sideways. I would assume that when it breaks out higher, it should continue to, once the sideways move is done, it should break out and continue to move higher. That would be the higher probability outcome. Now, could it do the lower probability outcome? Yes, but if it were to have an impulsive move down, come right down real sharply, I have a name for this type of a chart. It would, I call these volcano tops because it looks like the top of a volcano. They do happen, but they're rare. So again, you have to assume that from a probability standpoint that you're not likely to get a volcano top, that you're likely to break out. So we'll see if that ends up. And you had a real strong move Friday in the dollar. It hasn't broken out yet, but the expectation is that we should continue to move higher. The VIX, again, one thing that, so we had this big market sell-off, and the VIX really didn't move up that much. This was Thursday and Friday, and then you had this big drop yesterday. But what happened? The VIX opened up here, but let's look where it closed. It closed all the way down here. So you had a bullish reversal candle yesterday that we've shown you a number of times, and you had a bearish reversal candle on the VIX. That tells me that the volatility looks like it's reversing. It went from high to looking like it's coming back down. That would be an indication that'd be a bullish indication. Now, like I said, if that Russell 2000 chart breaks that support level, look out. You're going to see this VIX spike up beyond what it did earlier in the month. And that would be a big warning sign that people are freaking out. That level of freaking out will increase dramatically. Okay. That's not what I'm seeing now. In fact, today we're moving lower again as the market's moving higher. That would be a bullish sign there as far as reading the VIX. Chip stocks, again, we're moving sideways right here. I said we should move higher. We did dip down a little bit right here, but overall this looks corrective. This looks impulsive. This looks corrective. Bullish reversal candle yesterday as it kind of broke down a little bit from that sideways range. We should see chip stocks move up. Now I stopped out of NVIDIA because it met my criteria to stop out. I'll be pretty quick to jump back in it again, though. I do want to wait another day or so, maybe Thursday, maybe tomorrow. If I know I don't miss it, if it starts to take off, I'd jump in it. But maybe if it doesn't move far enough or move too far, we could look to add it on Thursday. But I do think that chip stocks are going to start taking off again. And I wouldn't mind jumping back into NVIDIA again. But SMH, now usually this is what we're comparing this to is we're comparing this to the Nasdaq 100, the QQQ. One of the driving forces right now of technology is the chip sector. I mean, chips are in everything. And when the chips stocks are going up, the rest of the tech sector is usually going up. When the chip stocks are going down, usually it's a warning sign, because it's hard to believe that if demand for chips is going down and those chip stocks are dropping, that these big other companies that use all those chips, that they're not going to be going down too. This is the reason why I'm looking at this, for those of you who are new, is that it used to be, another thing we'll look at is we look at the Dow Transportation Index, the IYT. This is based on a thing called Dow theory. I have a class on Dow theory in that training on YouTube there, you can go through. But what it basically says is, in order to kind of know the strength of the industrial stocks, which is the Dow 30, industrial, Dow Jones Industrial Average, you can look at the transportation stocks, and that would be your railroad stocks, your airlines, your FedEx, your UPS, your shipping companies. If they're doing really well, it means they're moving products, which means that your Walmart should be going higher, that your Honeywell should be doing well, and all these other companies that they should be performing, because that's a signal that the economy is strong, is when you're seeing all those products being moved and those shipping companies or transportation companies are making good money. So we compare the Dow transports to the Dow industrials. That's the typical Dow theory comparison. If I look at it here, it looks very similar to that oil chart. We have the big pullback here. It looks like a sharp move up, and this looks like an ABC pullback. Nice strong move up today. I would expect that we're going to see transports trend higher. Well, the opposite, or we could also look at the chip sector. Obviously Facebook and Google aren't necessarily shipping products everywhere, right? They're all their stuff is over the web and it's services and things like that on computers. These computers are driven by chips, and so the idea here is that this is kind of another way to look at the tech sector, is how well are the chip stocks doing. If they're really high demand for chip stocks and those chip companies are making a lot of money, there's a good chance that tech stocks are doing well and they're making money. So if you're wondering why I'm looking at those things, that's why I'm looking at these charts. That's kind of what I'm doing. Is it backing up what I'm seeing on the Nasdaq 100 chart? So far it is. It's showing me that there should be a nice rally here off of the technology stocks, and we'll see if that does end up taking place. I also have a chart here to kind of reflect Bitcoin. There's a few of these that you could use. I use GPTC. Grayscale is the company, but you can see that Bitcoin has had a pretty steep pullback right here. You're keeping an eye on this low right here. You don't want to see it break below that low. Can it hold that low? But I would anticipate this is something, Bitcoin tends to be a little bit more of that speculative trade. And so what I look at it as a signal of when there's a risk on type appetite, when it looks like professional traders are taking on more risk. They're not going to take on more risk unless they're pretty confident that they're going to get a nice rally, right? That risk is going to pay off. And so if you start seeing Bitcoin take off again, that's kind of a risk on type trade. It tells me that professional traders are taking on more risk. They're going to do that if they're more bullish, and that can be a signal of what they're doing. All right. I'm going to go a little over time today because I do want to go over a couple of charts. So the conditions are very bullish right now. So could I add some stocks to my portfolio? Yeah. Could I add something into the watch list? Yeah. So let's go into the sectors here. Now, I traditionally don't like utility stocks unless I'm just trading them for the high dividend. Now, I will tell you, even though it's at the top of the list, I would expect it to be at the top of the list because typically utilities get to the top of the list when you're at the end of when there's a little bit more fear in the market and there's more of a move towards a defensive move. Okay, and so if a risk on starts to take, if this rally is going to break out, what's going to happen is money is going to come out of, nobody's going to hold utilities. Professional traders aren't going to hold utilities. That was the defensive play. They're going to pull money out of utilities and go into computer technology and these other stocks that are really going to take off. The reason why they moved into utilities was the market was looking weak and they're going for the dividends. They're trying to get those higher dividends so they get some sort of return while the market is pulling back or looking kind of pathetic. So if I'm jumping into utilities right now, I'm probably getting in right when, if the market does go higher, I'm getting in right when these stocks start to drop, and I don't want to do that. Okay. So I'm kind of ignoring the utilities. I did find a couple I liked in the financials. A couple of the real estate ETFs look really strong. There's this IYR, which is again a real estate ETF, 95 strength rank. Let me switch this over to signals here. You can see it move back to a buy signal today, but again, you have this V-shaped move. It started to kind of move, had kind of a cup with handle formation, started to pull back here and then dip. This is the big sell-off we saw, but it did have a higher low there. Now we're right back. We're breaking out again here. We have this little pullback right through here. Looks like we're coming back up. This is acting like it wants to break out and make a run like these other runs where it really started to take off. See, it was moving sideways right through here and then started to take off. So this one's looking pretty good. It does look like it's moving to a buy signal today, but it's off the highs of the day. That would concern me a little bit. The buyers aren't able to hold that gain. I also like this pattern is going to look pretty much the same, but this Vanguard real estate ETF, it should look about the same. VNQ, a little less back and forth as the IYT, but very similar chart here. Here's your kind of your breakout area here. Off the highs again today off that, but looking, like I said, I might give that, I'll put this in the watch list, but I might give it another day or so to make sure it looks like it's going to break out of the sideways range. You know, there's a lot of these days where it's come off the highs and here it came off the highs and dipped down a little bit. It could still possibly come down to the lower part of that range again. But I do want to watch these, so I'm going to put both these in the watch list. Now to add it to the watch list, you got to, well, first of all, you got to set up your watch list. I go over that in one of the trainings too, is how to set up your new watch list there, how to name it, all that. But click on this little green plus button that says add to watch list. I'm going to add it to my stock specific class. I'm going to save and go to watch list. Actually, I'm not going to put the alert on this one because it's already gone back to, well, I could. It's going to go back to a buy signal day. So I'll get an email alert. And if that holds, if it does hold as a buy signal, I'll go ahead and put it on there. And actually, since both these charts were pretty much the same, I like this chart a little bit better. So I'm going to just hold on. I'll look at this one as the one I want to get into, this VNQ. Now, there really isn't, I went through a lot of these sectors, there really isn't, either we already have the stocks I like out of these sectors in the watch list, so no need to add them again, or that I didn't like the patterns. Now, one thing that you can do in these watch lists as well is you can, if you click on this little plus button, you can break it down into different areas within the different smaller sectors within the larger sectors. So for instance, one thing I did is I don't like the shipping companies right now. we've done a couple of trades on them and they haven't really worked out. And so I've been a little leery on the shipping companies. That these are the the big boats and everything. But I do like some of the rail stocks. So what I did is I went under transportation sector and then looked at rail under the hold section right here. I think I was under the hold section. Yeah, see, here's Norfolk Southern. Again, these historically have smaller strength ranks, so it only has a 72 strength rank. But there's Union Pacific. These are the larger rail companies. But when I looked at that chart, yeah, I like the chart. Again, you had this deeper pullback right here, impulsive move up, and this looks corrective. Not trading as strong today, a little faded a little bit there. Again, I'm gonna put this in the watch list. But if I want to get in, and I don't have to have any transportation stocks if I don't want to, but if the transportation stocks the sector still looks pretty good, I might want to add, maybe a rail stock. I could look at that. So I'm going to go ahead and put this in the watch list. And I'll have it signal to me when it goes from hold to buy. Send me the email alert. And then before I forget, I remember NVIDIA. I got stopped out of NVIDIA. I told you I actually want to put that one back in the watch list here. It went to a sell signal. So I might want to have this go up a little bit to, maybe get above these highs right here to maybe jump back in. It probably would be a hold signal if I did jump back in right there. Or I could wait for it to break out and it'll probably go back to a buy signal up here somewhere. But this, I mean, if you're gonna be in chip stocks, this is, and I know this is a little overvalued, but this is the future, man. This company is the Amazon back in 2000 when, like, I wonder if they're really overvalued right now. It's really, the price of the stock is really not from a valuation standpoint, it's really rich. Yeah, but look what it did over the next. It was the pioneer of internet commerce, and this is going to be the pioneer of just about everything coming up. Driverless vehicles, the metaverse, artificial intelligence, and you know how Jim Cramer often says, you don't trade Apple, you just buy it and hold on to it. I would probably feel the same way about NVIDIA. You buy it, that's why it was hard to stop out of it, because it's like I just feel like you got to manage it though, and I got to show you good discipline in managing the trades. But that's why I'm anxious to jump back in it again though, is because I just feel like this still has a lot of upside potential there. So I'm going to add it back into my watch list. Actually, I want it to tell me. I'm going to have it tell me when it goes from sell to hold. All right. Now, also one that, if you look under autos, tires, and trucks, another one that I'm anxious to kind of jump back into. If you look at domestic autos, it might be at a sell signal right now, though. Yep, let me go back to the sells. But Tesla is one that, there it is, there's Tesla. But I mean, it has like a beautiful bullish ABC pattern right here. It has a deep pullback. Started to move, bullish reversal candle today. I want it to give me a little bit of confirmation it's moving back up. Maybe go back from sell to hold at least. But that's one that I wouldn't mind jumping into again down the road, but let's go ahead and put that in the watch list. Again, these watch list stocks doesn't mean I have to trade it, but the whole point of the watch list is it's giving you a smaller list of stocks you don't want to miss. You don't want to miss these if you do have a trading opportunity. And I know the strength rank is a little bit lower on that one, but I think by the time it rallied back up and gave you that stronger hold signal, you might see a stronger strength. It might be up there a little bit closer to the 80 range or so. All right. Real quickly here, I did want to add, I'm not going to go through all the stocks in the watch list here. There is one that I might add to the portfolio. If you look at the portfolio, we've got a lot of cash built up. I stopped out of a couple of trades, NVIDIA and ASPN last week. The rest of these, though, I mean, although Eli Lilly pulled back a little bit the last couple of days, it still looks okay. It doesn't, I don't see anything there to panic. Let's let it have a chance to move back up again. LPX, again, this looks like it's completed a textbook bullish ABC pattern right here. It's up a little bit today. Let's hope this low holds, and it goes higher here. LPI, same thing. This got close to our stop. Our stop's down below here. And this is one I jumped the gun a little bit. I didn't wait for the buy signal. I saw that strong move, and I just managed the trade. I just put the stop down below there. This looked like the ABC, and it could just be that was a larger ABC. This is the first move up. This is the smaller, little deep pullback right here, double bottom, starting to move up again. We'll see. But we didn't stop out of that one, so I'm still in it, and hopefully it pays off. HBP looks good. Looks like it's trying to break out here and go higher. ACLS held the stop. The stop was right below here. It got close. Hopefully it pays off and continues to move higher there. And those are the only stocks. So on the watch list, I did, like I said, I'm not going to go through all these, but I want to look at it here real quick. Well, I'm going to look at two things here. Let's look at the SPY. Let's make sure it's not fading into the close. So far, it's not, so that's a good sign. And then in that watch list, let's take a look at this KRUS. It's in the retail sector, restaurant sector. It looks like it's going back to a buy signal. Now, I had this in the watch list all through here, and then it broke out. I didn't want to chase that move. It's probably a good thing. It came back down again. But now it's giving me a higher low. Today it's breaking out to a higher high. Let's see if it can get back up to here and maybe continue to move higher there. I'm going to go ahead and get into this one. I'll put a stop down below here. I could put it below here, and I may move it. If this thing gets closer to the breakout up here, I'll probably move it up to below here. It's not a big move. But right below here would be the low of that day right there was 57.17. So I'll just say 57 will be the stop. Let's add it to stock specific. Current value at 74, stop at 70 or 57. Let's just throw 100 shares on there. That would be about 7,500. The portfolio at risk would be at 2%. I want that closer to 1%, 1 to 1.5%. So let's try 75 shares. We got 5,000 in there, but that gets it down to, I want it below 1.5%. So let's do 70 shares. There we go. So I won't have a big position here. It'll be only 5,000, but because of that wider entry to stop range, I want to keep the amount if I get stopped out, I want to keep it to only about a 1 to 1.5% loss of the total portfolio there. So I want to manage it that way. So let's purchase this then. All right. I went over today, but like I said, I had some things to kind of go through. For those that might have joined a little bit late, let me just throw the slide up here. If you have questions, direct those to jerry@traderspro.com. And have a great week. We'll see you on Thursday. Now, I know that, Thursday's the day before Christmas Eve. I know that people are busy this time of year. You're with family, friends, you're traveling, you're taking time off. If you can't make the class on Thursday, it does get recorded. It does get posted to that YouTube channel. It takes a few hours to do that, but you can review it then. So if you don't feel like you have to join live on Thursday, I got to do it live, but you can just listen to it later on if you'd like, although the market might be closed by the time you remember that's something to point out. Remember, the market is closed on Friday. Typically, Christmas Eve is a half-day trading, kind of like we saw on Black Friday. But because Christmas is on a Saturday this year, the holiday, they get, the traders and the professional world usually get a holiday, right? And so sometimes they usually take the Monday off as the holiday in those situations. Like the 4th of July is on a Saturday. A lot of times that next Monday will be the day off for everybody. But because people really would love to have Christmas Eve off with everything that's going on, the market is closed on Christmas Eve. So just be aware of that. You're trading options. The option expiration is not this Friday. It's when the market closes on Thursday this week. But just be aware of that as well. I'll probably remind you on Thursday as well. All right. Thanks, everyone. Have a good week. Bye now.